Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis and also give you my next price targets here on the Quant chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And here on the Quant chart you can also see that last week Quant was also affected by the massive sell-off that we had in the market, where we saw this massive breakdown in a move that gave us a low at around the $95.6 mark. And to first give you a recap of what I have been expecting on the Quant chart, after seeing our low on the 26th of May, we started a 5-wave move to the upside, having the wave 5 giving us a high at around the $119.9 mark in what I've been terming as that first wave to the upside. Then we started a corrective structure in the formation of these larger Elliot wave count 2. Minimum target areas for this wave 2 highlighted on the charts using this red target area, which I came up with by connecting the fibs from the low of the first wave to the high of that wave 1, giving me a minimum retracement area between the fib level 0.5 and a maximum of the fib level 0.78, which is an area that we fully maximized, and then at some point we lost the fib level 0.78, and as a result of that, what that means is that we are just about to fully hit invalidation points for these higher Elliott wave count 2 once we see a close below the fib level 0.78, and once that plays out, that will be suggesting lower prices here on the Quant chart, where we can expect further breakdown. But in case we continue holding within this target area, then we can expect the start of another impulse in the formation of these larger Elliott wave count 3. And before I give you the alternative scenario to these that I have right here on the charts, I want to first give you information of the core news that we have this week, where I'm expecting the CPI. I'm also expecting the PPI and the FOMC meeting, and as a result of those news, I'm expecting a lot of volatility in these markets. And if those news are positive to the market, then we can expect a massive recovery in the market. But in case they are negative, then we can continue expecting further breakdown. And to give you the alternative scenario to what I have here on the Quant chart, the moment we continue seeing further breakdown and we lose the $100.3 mark and also the $97.5 mark here on the chart, then that will be suggesting an even more bearish scenario here on the Quant chart, where in my previous videos I had been saying to you that after seeing the bear market close at around the $40.1 mark, we started a 5-wave move to the upside, having the wave 5 giving us a peak at around the $229 mark, completing the formation of these larger Elliott wave count 1. Then we started a corrective structure in the formation of these larger Elliott wave count 2. Minimum target areas highlighted on the charts using this red target area, which lies between the fib level 0.5 and the fib level 0.78 by connecting the fibs from the bear market low to the high at around the $229.8 mark. And since that target area has not yet been fully maximized, there are still chances that we could see one more leg down in this ABC corrective structure over here, having the wave C fully maximizing our red target area, which lies between the $135.5 mark and the $80.8 mark. And that suggests that in case further breakdown continues here on the Quant chart, we could see further breakdown, lose the $97.5 mark, the $94.3 mark low, and continue seeing further breakdown, fully maximizing this red target area in what will be able to put in place the low for these higher Elliott wave count 2 before we can start gearing up in the formation of a larger Elliott wave count 3. So that is what you can expect here on the Quant chart in case further breakdown continues and we lose the $100.3 mark and the $97.5 mark are areas here on the charts, and those are my breakdown targets. On the indicators, on the RSI, we are trading at around the 36 mark. Also taking a look at the MACD, we have been able to print a bullish cross, so let's be patient and see how that plays out, and I'll be keeping you updated.